Hello everyone, I'm CA Neeraj B. Welcome back to my YouTube channel at the rate Accounting Buddy NB. Do you really understand the bank reconciliation statement or just the theory behind it? Let's find out. In today's video, we go through 100 plus carefully selected questions and answers. No theory, only pure practice. From descriptive questions to MCQs, true or false, fill in the blanks and one word answers. Everything you need to know for your exams and real understanding is right here. Watch till the end and test how strong your BRS concepts truly are.
In this section, we will discuss the descriptive questions and their answers. Question number 1 is, what is the significance of debit and credit balance of cash book? And the answer is, debit balance as per cash book means that the account holder has that much balance in the bank, while the credit balance as per cash book means the amount which has been withdrawn in excess of the deposits. It is called the overdraft. Debit balance means the favorable balance and the credit balance means the unfavorable balance. Question number 2 is, why is it necessary to prepare a bank reconciliation statement even if the cash book and the passbook show similar balances? And the answer is, even if balances seem similar, bank reconciliation statement helps detect timing differences, bank errors, or unrecorded transactions. It ensures accuracy and acts as a cross-verification tool for both internal and external records. Question number 3 is, how does a bank reconciliation statement help improve internal control in an organization or business? The answer is, bank reconciliation statement highlights discrepancies between the cash book and the bank statement. It helps detect unauthorized transactions, errors and delays, improve financial discipline and preventing frauds. Question number 4 is, explain with reason why a check issued but not presented for payment causes a difference in BRS. And the answer is, such a check is recorded as a payment in the cash book but not yet shown in the bank statement. This creates a lower balance in the cash book compared to the bank balance until the check is presented. Question number 5 is, how does a dishonor of a check affect the balances in the cash book and the bank statement? And the answer is, if a check deposited is dishonored, the bank will not credit the amount, but the business may have already recorded it in the cash book. This causes a difference, which bank reconciliation statement helps identify and correct. Question number 6 is, a customer deposits money directly into the business bank account. What impact does this have on bank reconciliation statement? The answer is, the deposit appears in the bank statement but not in the cash book if the business is unaware. It increases the bank balance compared to cash book, requiring an adjustment in bank reconciliation statement. Question number 7 is, if the bank has charged interest or deducted fee without informing the account holder, how is it handled in BRS? Answer number 7 is, these charges appear in the bank statement but not in the cash book. Bank reconciliation statement helps identify these deductions, prompting the business to update its records accordingly. Question number 8 is, what would happen if a business never prepared a BRS? Explain the possible consequences. And the answer is, errors may go unnoticed, leading to inaccurate financial statements. Unrecorded bank charges or missed receipts would cause misreporting, poor cash management, and audit issues. Question number 9 is, how does a bank reconciliation statement reflects both errors and genuine differences between the cash book and the bank statement? And the answer is, genuine differences like unpresented checks are due to timing differences. Errors such as wrong entries or omissions results from mistakes. Bank reconciliation statement helps distinguish and address them appropriately. Question number 10 is, explain how modern accounting software can simplify the process of preparing a bank reconciliation statement for students and businesses. Answer is, software automatically imports bank data and matches it with the cash book entries. It reduces time, increase accuracy and flags unmatched items instantly, making reconciliation simpler for users. Question number 11 is bank reconciliation statement is prepared to determine the bank balance. Comment. The answer is the given statement is incorrect. Bank reconciliation is prepared to reconcile and explain the reasons of difference between the bank balance as per cash book and as per bank statement on a particular date. Question number 12 is the bank has given a wrong credit of $15,000. The accountant of the business recorded the amount in the cash book and credited the miscellaneous income account. Give your opinion on the action taken by the accountant. The answer is the accountant is not correct because the money does not belong to the business and the bank will reverse the amount when the error is detected. Question number 13 is how the direct payment by a customer affect the passbook balance, and the answer is a direct payment by a customer will increase the credit balance as per bank passbook or reduce the debit balance as per bank passbook. In this section, we will address very short answer type questions. Question number 14 is what is a bank reconciliation statement? And the answer is a statement that matches the bank balance as per books with the bank statement. Question number 15 is why is bank reconciliation prepared? The answer is to identify and rectify differences between the cash book and the bank statement. Question number 16 is name any one reason for difference in bank balance, and the answer is checks issued but not yet presented. Question number 17 is what is a dishonored check? The answer is a check not accepted by the bank due to insufficient funds or any other reason. Question number 18 is where is bank reconciliation recorded? And the answer is it is a memorandum statement not recorded in the books. Question number 19 is what type of error is check deposited but not cleared? And the answer is timing difference. Question number 20 is who prepares the bank reconciliation statement? And the answer is the account holder or their accountant. Question number 21 is does bank reconciliation affect the trial balance? And the answer is no, it's a control mechanism. Question number 22 is what does an overdraft mean in a bank statement? And the answer is a negative balance, withdrawals exceed deposits. Question number 23, what is the source document for bank reconciliation statement? And the answer is bank statement, passbook and the cash book. Question number 24 is how often should a bank reconciliation statement be prepared? And the answer is monthly or as frequently as needed. Question number 25, what is meant by check deposited but not credited? And the answer is checks is recorded in the books but not yet cleared by the bank. Question number 26 is what is a standing instruction? And the answer is pre-authorized automatic bank payments. Question number 27, what is meant by a direct credit in the bank statement? And the answer is amount credited by the bank on behalf of a third party. Question number 28 is bank reconciliation statement required for cash transactions? And the answer is no, it is required only for the bank transactions. Question number 29, what does bank charges represent in reconciliation? And the answer is charges debited by the bank not yet recorded in the cash book. Question number 30 is what are unpresented checks? The answer is checks issued but not yet encashed by the recipient. Question number 31 is what is the impact of interest credited by the bank in the bank reconciliation statement? And the answer is it increases the bank balance, may needs to be added in the cash book. Question number 32, what is the treatment of a wrong debit in the bank statement? And the answer is it needs to be added back during the reconciliation. Question number 33, does bank reconciliation helps in fraud detection? And the answer is yes, it helps identify unauthorized transactions. Question number 34 is what does debit balance as per cash book means? The answer is debit balance as per cash book means amount lying deposited in the bank. Question number 35 is what does debit balance as per bank passbook means? The answer is it means amount overdrawn from bank and thus payable to bank. Question number 36 is the bank reconciliation statement a part of double entry system? And the answer is no, bank reconciliation statement is not a part of the double entry system. It is a method to reconcile the two balances. Question number 37 is it correct that bank reconciliation statement is prepared once at the end of the year? The answer is no, it is not correct. It can be prepared at any time during the year. Question number 38 is how will direct payment by a customer affect the passbook balance? The answer is a direct payment by a customer will increase the credit balance as per passbook or reduces the debit balance as per passbook. Question number 39 is state two transactions which may be recorded in the cash book but not in the passbook. The answer is checks issued but not presented in the bank for payment, and second is checks deposited into the bank but not credited or collected. Question number 40 is state two transactions which may be recorded in the passbook but not in the cash book, and the answer is interest allowed or credited by the bank charges and the commission charged by the bank. In this section, we will address the multiple choice questions. Question number 41 is bank passbook of an account holder is a copy of, and the options available are option A, the bank columns in the cash book of the account holder, option B, the account in the books of a bank, option C, the cash columns in the cash book of a customer, and option D, all of the above. And the correct answer is option B, the account in the books of a bank. Question number 42 is bank reconciliation statement is prepared, and the available options are option A, to know the payments made through checks, option B, to know the errors in the bank passbook, option C, to compare the cash book balance with bank passbook balance and ascertain the difference, and option D, all of the above. And the correct option is option C, to compare the cash book balance with the bank passbook balance and ascertain the difference. Question number 43 is bank reconciliation statement is, and the available options are option A, a part of the double entry system, option B, not a part of the double entry system, option C, a part of single entry system, and option D, none of these. And the correct option is option B, not a part of the double entry system. Question number 44, balance shown in the balance sheet is that of, and the available options are option A, cash book, option B, bank passbook, option C, adjusted cash book, and option D, none of these. And the correct answer is adjusted cash book. Question number 45 is bank reconciliation statement is started with, options available are bank balance of the cash book, option B is cash balance of the cash book, option C is passbook balance, and option D is bank balance of the cash book or passbook balance. And the correct option is option D. Question number 46 is balance as per cash book is $5,000. Checks issued but not presented is $1,200. Direct deposit by the customer not yet recorded in the cash book is 500. What is the balance as per passbook? And the available options are option A, $4,300, option B, $6,700, option C, $5,700, and option D, $4,800. Let us start with the cash book debit balance of $5,000. Now let us understand how the unmatched transaction of the checks issued but not presented for $1,200 will be treated in the bank reconciliation statement. It means the cash book balance is reduced by $1,200, whereas the bank balance is not reduced. Therefore, $1,200 will be added to the cash book debit balance. Now let us analyze the second unmatched transaction of the direct deposit of $500 by the customer. By direct deposit of $500 by the customer, only the bank balance has been increased and not the cash book balance. Therefore, to bring the cash book balance at par with the bank book balance, it is added. Therefore, the correct answer is option B, $6,700.
Question number 47 is balance as per passbook is $8,000. Checks deposited but not cleared is $2,000. Bank charges not recorded in cash book is $100. What is the balance as per cash book? And the available options are option A $5,900, option B $6,000, option C $10,100, and option D $5,800. Let us start with the bank passbook credit balance of $8,000. If we analyze the unmatched transaction of the checks deposited but not cleared for $2,000, it means cash book balance is increased by $2,000 whereas the bank balance is not increased. Therefore, $2,000 will be added to the bank passbook balance to bring at par with the cash book balance. Now, if we analyze the second unmatched transaction of $100 bank charges charged by the bank, it means the bank passbook balance is reduced by $100, whereas the cash book balance is not reduced. Therefore, $100 will be added to the bank passbook balance to bring at par with the cash book balance. Therefore, the correct option is option C, $10,100. In this section, we will address true and false question and answers. Question number 48 is, a bank reconciliation statement is prepared only when there is an overdraft in the bank account. This is a false statement. Bank reconciliation statement is prepared regardless of whether the account shows a favorable balance or an overdraft. Its purpose is to reconcile differences between the bank passbook and the cash book of the business. Question number 49 is, a check deposited in the bank but not yet cleared will cause the bank balance as per cash book to be higher than the bank statement balance. This is a true statement. In the cash book, the deposit is recorded immediately, but the bank statement will only show it after clearing. Until then, cash book balance will be greater than the bank statement balance. Question number 50 is, bank reconciliation statement is a part of double entry accounting system. This is a false statement. Bank reconciliation statement is an off-book statement. It's a reconciliation tool, not an accounting entry. Question number 51 is, bank charges are recorded in the bank statement before the account holder records them in the cash book. This is a true statement. Bank charges are directly deducted by the bank, so the customer learns of them only after receiving the bank statement. Question number 52 is, checks issued but not yet presented will make the cash book balance higher than the bank statement balance. This is a false statement. The cash book records a reduction immediately, but the bank balance remains unchanged until the check is presented for payment. Question number 53 is, check deposited into the bank if dishonored will increase the bank balance. This is a false statement. Dishonored check means it is not cleared. Hence, it does not increase the balance. If previously recorded, it must be reversed. Question number 54 is, direct deposits made by customers in the company's bank account increase the bank statement balance before being recorded in the cash book. This is a true statement. The company learns about such deposits only after receiving the bank statement. Question number 55. Bank reconciliation statement can be prepared daily, weekly, or monthly depending on business needs. This is a true statement. Frequency depends on the transaction volume and the control requirements. Question number 56 is, an error in recording a payment in the cash book will not affect the bank reconciliation statement. This is a false statement. Any error in the cash book will create a difference with the bank statement and must be adjusted in the bank reconciliation statement. Question number 57 is, if a check issued is post-dated, it will appear in the bank reconciliation statement as check issued but not presented. This is a false statement. A post-dated check is not a valid payment until the date arrives. It is not recorded as issued until that date. Question number 58 is, a standing order payment reduces the bank balance before the business records it in the cash book. This is a true statement. Standing orders are automatic payments. The bank processes them directly.
Question number 59 is bank errors, though rare, must be considered in the bank reconciliation statement preparation. It is a true statement. Banks can make mistakes such as posting to wrong account or wrong amounts. Question number 60 is interest credited by the bank is first recorded in the cash book. This is a false statement. The bank credits interest directly. The customer records it later after seeing the bank statement. Question number 61 is if both the cash and bank statements are correct, no bank reconciliation is needed. This is a false statement. Timing differences, for example, unpresented checks, uncleared deposits, can still cause mismatch even if both the records are correct. Question number 62 is bank reconciliation helps in locating errors both in the cash book and in the bank's record. The statement is true. The reconciliation process highlights differences from both the sides. Question number 63 is bank reconciliation statement ensures that no fraud has taken place. This is a false statement. While it helps detect discrepancies and possible frauds, it is not a foolproof fraud prevention tool. Question number 64 is a credit balance in the cash book means the business has money in the bank. It is a false statement. In the cash book, a credit balance means an overdraft, that is the liability, while a debit balance means a favorable bank balance. Question number 65 is debit entries in the bank statement increase the bank balance. This is a false statement. Account in bank's book is a liability account. Debit entries will reduce the balance. Question number 66 is a check deposited and entered on the same day will never appear in a bank reconciliation statement. This is a true statement. Since there is no timing gap, it will match in both the records. Question number 67. If a check is issued and later cancelled, it must appear in the bank reconciliation statement. This is a false statement. If cancelled before presentation, it is reversed in the cash book, so no timing difference exists. Question number 68. A favorable balance means the business is in a credit balance with the bank. This is a true statement. The bank owes money to the business. It means liability from the bank's point of view and asset from the business point of view. In this session, we will test our knowledge through fill in the blanks questions and answers. Question number 69 is bank reconciliation statement is prepared to reconcile the difference between the dash balance and the dash balance. And the correct answer is cash book balance and the passbook balance. Question number 70 is when the bank shows more balance than the cash book is said to be dash. And the correct answer is understated. Question number 71. Checks deposited but not yet cleared cause the passbook balance to be dash than the cash book balance. And the correct answer is less than the cash book balance. Question number 72. Checks issued but not yet presented cause the bank passbook balance to be dash than the cash book balance. The correct answer is more than the cash book balance. Question number 73 is bank reconciliation statement helps in identifying errors or dash made either in the cash book or in the bank's record. And the correct answer is omissions. Question number 74. The passbook is maintained by the dash and the correct answer is by the bank. Question number 75. The cash book is maintained by dash and the answer is by the account holder. Question number 76. Bank charges recorded in the passbook but not yet in the cash book will make the cash book balance appear dash than the passbook balance. And the correct word is more than the passbook balance. Question number 77. Direct deposits made by customers into the bank increases the dash balance but not immediately the dash balance. And the correct words are passbook balance and not immediately the cash book balance. Question number 78 is standing instructions like insurance premium or loan EMI reduce the balance in the dash but may not be recorded in the dash. And the correct answer is the passbook and may not record in the cash book. Question number 79 is an overdraft balance as per passbook means the account has dash balance as per cash book? And the correct answer is credit balance as per cash book. Question number 80. If the bank wrongly credits an entry, passbook will show dash balance than actual. The correct word is more than the actual balance. Question number 81 is, if the cash book is overcast, the cash book balance will be dash than the passbook balance. And the correct word is more than the passbook balance. Question number 82 is, the process of comparing cash book with passbook entries is called reconciliation. Question number 83 is, interest allowed by the bank increases the balance as per dash but not until recorded in the dash, and the correct answer is passbook and the cash book. Question number 84 is, when a check is dishonored, it is first reflected in the dash, and the correct answer is passbook. Question number 85 is, a favorable balance in the cash book means the business has dash with the bank, and the correct answer is deposits with the bank. Question number 86. A bank reconciliation statement is generally prepared at the end of every dash. The correct answer is at the end of every month. Question number 87. Errors in totaling or balancing are called dash errors, and the correct answer is clerical errors. Question number 88. Bank reconciliation statement is a statement, not a dash, and the correct answer is account. It is not an account. Question number 89 is, bank reconciliation statement ensures accuracy and prevents dash, and the correct answer is fraud. Question number 90 is, interest charged by the bank makes the cash book balance dash than the passbook balance until adjusted, and the correct answer is more than the passbook balance. Question number 91. Checks issued but not presented will appear in the dash but not in the dash, and the correct answer is cash book but not in the passbook. Question number 92. A credit entry in the passbook means an dash in the bank balance, and the correct answer is an increase in the bank balance. Question number 93 is, a debit entry in the cash book means a dash in the bank balance, and the correct answer is a decrease in the bank balance. Question number 94. Wrong credit given by the bank will not be entered in dash and will be reversed in dash, and the correct answer is will not be entered in the cash book and will be reversed in the bank passbook. In this section, we will address few one-word answer questions. Question number 95 is, what is the bank's record of a customer's account called? And the correct answer is passbook. Question number 96, what is the bank's record of bank transactions called? And the correct answer is cash book. Question number 97, in the bank statement, which entry reduces the customer's balance? And the correct answer is debit entry. Question number 98, in the bank statement, which entry increases the customer balance? And the correct answer is credit entry. Question number 99 is, what is the written order given to a bank to pay a specific sum called? And the correct answer is check. Question number 100, what do we call checks issued but not presented to the bank? And the correct answer is unpresented checks. Question number 101, what do we call checks deposited but not yet cleared by the bank? The correct answer is outstanding checks. Question number 102, what is the term for a check returned unpaid by the bank? And the correct answer is dishonored check. Question number 102 is, what is the common reason for mismatch between the cash book and the passbook due to human mistakes? And the correct answer is error. Question number 103, what type of entry is required to cancel a wrong entry? And the correct answer is reversal entry. Question number 104, what do we call the money deposited into a bank account? And the correct answer is deposit. Question number 105, what do we call the deduction made by the bank for its services? And the correct answer is bank charges. Question 106, the term used when withdrawals exceeds the deposits in a bank, and the correct answer is overdraft. Question number 107. What is the process of matching cash book and passbook called? It is called reconciliation.
Next week on 15th November, we move completely into practical only and no theory lesson. You will learn step-by-step BRS preparation through real business style examples. We will take illustrations and work through starting with debit favorable balance as per cash book, transaction by transaction adjustments and final BRS preparation and presentation. This section is purely hands-on, ideal for students and who wants to practice and master the process of reconciling cash book with the bank statement balance with confidence. If you enjoy the content of my channel and appreciate my teaching style, please subscribe, share and like my YouTube channel @Accounting Buddy NB. Thank you and goodbye for now.